The homewares sector is forecast to grow marginally in 2012 by 0.1%.
Due to lower average selling points and frequent rates of replacement, homewares is set to outperform the other home-related categories yet again this year, returning to growth for the first time since 2008. Several factors will be fundamental to the improved performance of homewares, none more so than the continued value focus from supermarkets and low-end retailers. While the grocers have admittedly had a tough time over the past 12 months, with non-food growth being far slower than expected, these poor performances have been largely dragged down by weak demand for both electricals and big-ticket furniture items. And we'll see the grocers continue to benefit from their high levels of footfall driving homewares spend in 2012. As well as continued focus from the grocers on homewares, 2012 will see some exceptional events which are likely to have an impact on growth. Firstly, the government's stamp duty holiday will end in March, which is likely to drive a small boost in housing market volumes, especially for first-time buyers in Q1 2012. Verdict expects that as first-time buyers are unlikely to have a comprehensive set of homewares, volumes will benefit as many seek to make their purchase both in anticipation of and following a house purchase at the start of the year. While this is likely to inflate demand, the effect will both be temporary and minimal, with volumes in the sector returning to normality later in the year. This will also have a negative impact later on in the year, as after the holiday is over, fewer first-time buyers will be planning moves, and those which do move will have less money to spend on homewares and other home-related products. The Queen's Jubilee and the London 2012 Olympics will also drive growth in homewares through the middle part of the year, with consumer sentiment being boosted by what is expected to be a summer of occasion. Consumers are likely to relax their spending slightly, with less restraint being held over discretionary purchases. Homewares' increased exposure to gift and souvenir items will prove beneficial due to increased spending from tourists and domestic shoppers alike. Retailers must remain cautious. With the housing market playing a considerable role in the growth of the homewares market, its continued decline, especially in volumes for the foreseeable future, is likely to continue to exert pressure. While the homewares market returns to growth, many within are far from out of the woods. General merchandise retailers at the value end of the market will do well, with the range and the original factory shop looking to open stores, while mid-market specialist Dunelm Mill is likely to have another strong year, as its broad price architecture, growing store base and increased focus on multi-channel will chime well with homewares shoppers. The retailers which are likely to struggle are those who rely on footfall driven by big-ticket furniture, electricals and DIY products, due to the fact that demand simply isn't there to generate the footfall required in order to drive add-on homewares purchases. Smaller independent retailers will also come under increased pressure as they struggle to compete with the larger specialists and non-specialists alike.